Did you know that choosing the wrong golden visa investment model could cost you hundreds of thousands of dollars with zero return? While some investors walk away with profitable real estate and permanent residency, others lose their entire investment to failed projects or non-refundable donations that disappear into government budgets. Hi, I'm Reza from INGWE Immigration, a global mobility firm built on trust and expertise. We specialize in breaking down barriers between countries, empowering you to invest, live, work, and do business globally with ease and confidence. We know that golden visa programs can be overwhelming. There are dozens of countries, multiple investment options, and the stakes are high when you're talking about hundreds of thousands of dollars. That's exactly why we help clients from all over the world navigate these complex investment migration processes so they can move forward with clarity and complete peace of mind. In the next few minutes, we'll explore donation-based programs, real estate investments, and fund options. By the end, you'll know exactly which model aligns with your goals and how to avoid the costly mistakes that trap too many investors. Let's start with donation-based golden visas. This is exactly what it sounds like. You make a non-refundable contribution to a national development fund or a specific government project in exchange for residency or citizenship. It's the most straightforward option, but here's what you need to understand about where your money actually goes. Most donation programs operate in the Caribbean or other island nations. Your contribution typically flows into consolidated government budgets, infrastructure projects, healthcare, education, or climate resilience programs. The key word here is typically, because transparency varies dramatically between programs. Let me break down the most popular options. Antigua and Barbuda starts at $230,000, and they actually publish parliamentary reports showing where donations go, making it one of the region's most transparent programs. St. Lucia requires $240,000 for their National Economic Fund, with public audits covering fund allocation. Then you have programs like Dominica, which officially requires $200,000 but offers limited transparency on how funds are actually used. Nauru launched their program in 2024 with contributions starting at just $105,000 earmarked for climate relocation projects, but since it's new, financial reporting remains untested. Grenada stands out because of its E2 treaty agreement with the United States. Their program requires $235,000 to the National Transformation Fund, but you gain the ability to apply for U.S. investor visas later. St. Kitts and Nevis rounds out the major options with $250,000 to their Sustainable Island State Contribution Fund. Here's the critical point about donation programs. You get unmatched speed and simplicity, but there's no underlying asset, no resale value, and no return potential. Unlike real estate or fund investments where you might recover some capital, donations are gone forever. You're essentially buying citizenship or residency at a fixed price with no financial upside. So, what about real estate investment visas? You purchase property, gain residency or citizenship, and theoretically build wealth simultaneously. Even though a great alternative, this model can come with significant risk if not approached with proper due diligence and expert guidance. Industry data shows some troubling patterns. In many Caribbean citizenship by investment programs, projects are frequently delayed or worse, never completed. A common risk is so-called paper projects, where investors end up buying shares in developments that exist only on paper. Instead of owning real property, they're left holding intangible assets with little to no value. And then there's the pricing problem. Properties are frequently sold at inflated values with limited independent appraisals or pricing benchmarks. In addition, most people don't consider weak secondary markets. Even if you successfully purchase property, you may face extremely limited resale opportunities, especially in smaller economies with restricted foreign buyer demand. Combined with mandatory holding periods of 5 to 7 years, you're exposed to significant market volatility with limited exit options. Geographic and climate risks add another layer of complexity. Many CBI properties are located in hurricane-prone zones or coastal developments that carry long-term exposure to natural disasters and potential devaluation. With that being said, there are programs out there with reliable real estate options. Malta's residency program offers one of the fastest and most cost-effective permanent residency pathways in the European Union. The program requires property purchase of at least 375,000 euros anywhere in Malta, or renting a property for at least 14,000 euros per year for 5 years, alongside government contributions and fees. Panama represents the best alternative to Caribbean programs for investors seeking long-term value and stability. While it isn't a direct citizenship program, it offers two powerful residency pathways: the Friendly Nations visa, requiring a minimum 200,000 US dollars real estate investment, and the Qualified Investor Program, which grants immediate permanent residency with a 300,000 US dollars investment. The key to successful real estate investment is treating it exactly like a major property purchase in your home country. Insist on independent property appraisals, verify the developer's track record and financial standing, and have all contracts reviewed by qualified legal professionals. Avoid vague share schemes, unregistered projects, and any offer lacking clear ownership documentation. Investment fund visas represent the most sophisticated golden visa option. Instead of donations or property, you place capital into approved private equity, venture capital, or government-linked funds. These funds must often be held for 5 or more years, with government vetting of fund managers varying widely between jurisdictions. Portugal's Golden Visa exemplifies this model and remains one of Europe's most popular investment migration programs despite major structural changes. As of 2024, real estate is no longer permitted as a qualifying option. All new applicants must invest a minimum of 500,000 euros into regulated Portuguese investment funds. The numbers are quite impressive. Between 2012 and 2023, Portugal's Golden Visa program attracted 7.3 billion euros in investments, and in 2024 alone, it recorded over 5,000 new approvals. The CMVM provides oversight with strict rules requiring at least 6% of fund capital allocated to Portuguese companies and investments. Every qualifying fund publishes detailed prospectuses showing exact asset allocation breakdowns, operating under European securities regulations with mandatory transparency requirements. But even with strong regulatory frameworks in place, it's important to remember that investment funds do not guarantee returns. Like any market-driven asset, they carry inherent risk. Beyond donations, real estate, and investment funds, several countries offer alternative pathways that may better suit specific investor profiles. These include refundable government bonds, business investment with job creation requirements, startup visa programs, and cultural or educational contributions. One major alternative pathway is the United States EB-5 program, which requires $800,000 in targeted employment areas or $1.05 million elsewhere, plus regional center administrative fees ranging from $60,000 to $80,000. Each investor must support 10 full-time U.S. jobs with strict oversight mechanisms implemented after congressional reauthorization in 2022. The key insight here is that viable projects with established developers and clear job creation pathways typically charge lower administrative fees. Projects with excessive fees often compensate for weak fundamentals through aggressive marketing. So high administrative costs should be a red flag for any alternative investment pathway. So here's your takeaway. Donations are fastest but offer no return. Real estate requires extensive due diligence and market understanding. Funds need investor sophistication, and programs like EB-5 focus on national economic impact but come with longer timelines. The key is aligning your priorities, whether that's speed, return potential, or long-term impact. At INGWE, we've guided hundreds of families navigate these exact decisions, helping them avoid costly mistakes and secure the program that truly matches their goals. We don't sell templates or generic advice. Every strategy session is personalized to your specific situation, citizenship goals, and investment capacity. So if you're ready for the next step, book your consultation today using the link in the description. And if this breakdown helped clarify your options, hit that subscribe button. We break down complex immigration and investment topics every week so you can make informed decisions with confidence. Thank you for watching, and see you in the next video.